Hello, everyone, and thank you for joining us for another episode of Napkin Numbers. We're going to continue with our theme of commercial real estate, and today we're going to be discussing a couple of case studies, one on the buy side, one on the sale side. I'm going to turn over to Scott to talk about some of the deals we've seen in our past. Go ahead, Scott, take us away.
Thanks, Rahsaan. We come across all kinds of scenarios, and we may have mentioned this in the past, is on every transaction, there's some type of real estate component. It's either leasing or it's buying the real estate if you're a buyer. On the sell side, you might be leasing also if you're the landlord, or now selling your assets. So there's some component where it's important to have a real estate professional examine the transaction. So, for instance, we had a buyer that was looking at a business, had the property, and they hired a commercial real estate broker, and they were somebody that would help establish that market value with the current conditions and guide them through that real estate process. So, like during due diligence, they said, "Hey, here's what you should look out for environmentally, the appraisals, the inspections, and so forth. What to look for in the property, the questions to ask." And how those current market conditions could affect value, and also what to expect in the future. I mean, there's a long list of value items that a commercial real estate broker brings to the table. What it did for the client, though, is by having that new arrow in their quiver of I want to buy this real estate, they were able to put that into their financing and get a longer amortization, which meant lower payments, better cash flow, and potential tax savings for the cost segregation. So all of that worked into a better return on investment for the entire business and the real estate that they're buying at the same time. It definitely made it a win for that buyer. On the sell side, there can be a lot of different components that come up. One of the things that we usually see for sellers is there's this emotional attachment to the building. They've been there for 30 years. The name of the company's on the building. It's on their hat. It's on their truck. It's part of their identity. And that emotional attachment makes them say, I think I want to hold on to this building after I sell. And one of the things that happens is when you sell your building, you are no longer that tenant that's making the payment. And now, of course, if you have multiple tenants, it might change a little bit, but most of the time, when we see these medium or to small size businesses, they are a single tenant in the building they own, and they have this risk now of payment risk because they're a property manager instead of the business owner. So it switches to a non-owner occupied building from an owner occupied. And that can create some heartburn from their lender. You should always check with your lender. But that tenant that's no longer you, you may want to start looking at other avenues, which could be a 1031 exchange. And in a 1031 exchange, that's where you would, again, hire a commercial real estate agent to evaluate the price, the market conditions, and other appropriate real estate investments so they can assist with that maximizing your real estate ROI. Here's another situation. We had a seller that decided, hey, I want to hold on to the real estate. Now, everybody makes different decisions when it comes to what do I want to do with my real estate. And they said, I don't want to pay to sell it. This is part of my retirement plan. And when they evaluated all the different opportunities in front of them, they said, we're keeping the real estate. They ran into this challenge about 6 months after closing, that payment risk. And they said, we got a phone call back. They said, we'd like to sell all of our properties now. And they had 3 different locations because we think the person that's paying the rent is going to run our business that we sold them into the ground. So it's definitely something that you want to think about as a landlord, is the landscape changes, right? Of what you want to do and how you want to run your property management business. Here's another reason why real estate agents are important. I think they are just like anything else. It's just like us, our services, products we provide, we're a tool to help assist with an end result. One of the things I've seen or the question we get is, well, my attorney can write this up, right? And they can write the legal document for like a lease. There's a difference. One of the things that we ran into is we had somebody decide, I want to have my legal counsel write up my lease agreement. And I'll tell you what, it was perfect. Everything in the lease agreement was exactly what it needed to be. The one challenge they had was there was no context for what the rent amount should be. Where the commercial real estate agent went out to the market, said, here's what the market should be, here's what the rent should be. And the difference was the rent was $12,000 a month. The attorney had thought, oh, that must be a per year because that sounds really expensive. So they made it $1,000 a month. Now that's a big difference as a landlord to receive on a monthly payment, especially if now you have a legal binding document. So real estate agents, they really help with finding out what is that market rate, which helps on your ROI.
Excellent example, Scott. One thing to consider also, folks that are tuning in, is when you're buying the real estate, how are you going to finance it? A lot of people will tell you have to put at least 30% down. That sounds like a big hit to your pocketbook, right? Well, the SBA has recently gotten pretty aggressive with their changes. And depending on your situation, you might be able to do a 504 loan and get 100% financing. So if that's something that you're considering or want to discuss, please reach out to us. And that will conclude our episode of Napkin Numbers today. Thank you for joining us. If you like the content that we've been giving you, please hit the like and subscribe button and follow us. And we look forward to you tuning in to the next episode of Napkin Numbers. Thank you.